It got a lot of attention after that sharp climb earlier in the year, then the inevitable pullback. That's why it's in the conversation again. Some people are still looking at the revenue and burn model and saying the fundamentals haven't gone away. Others are looking at the price action and saying the party is over for now. Before we go any further, if you're finding this useful, drop a like, hit subscribe if you haven't already, and leave a comment with your take on Beat. I actually read them. On the ratings and signal side, a lot of the automated and community sentiment has been cautious to outright negative. You'll see plenty of sell or strong sell leaning signals floating around, especially from short-term technical scanners. Funding rates and open interest in the perps have flipped around a few times, but the overall short-term outlook from the chart crowd remains skeptical until it can reclaim and hold above those recent resistance zones with real volume. There's not a huge wall of traditional analyst coverage the way you get with bigger names, so a lot of the ratings are more algorithmic or community driven, and those have mostly been leaning defensive. Now here's where it gets interesting. Is this actually undervalued or is it a classic value trap? One side will point to the weekly revenue numbers the project has been putting out and the buyback and burn mechanism. Platform activity generates fees, a portion goes to buying Beat and burning it permanently. They've been reporting consistent weekly burns in the hundreds of thousands of tokens, sometimes more, and cumulative burns have climbed into the tens of millions. Circulating supply is still only about 30% of the max, so the argument is that if the game and the AI features keep growing, the deflationary pressure plus real usage could eventually reprice the token higher. The agent native concept is also unique enough that some people think it has longer term narrative juice if AI agents become a bigger theme. Looking at the chart, the bigger picture still shows a clear downtrend from those highs near $11. Price has been making lower highs and lower lows for weeks. There's been some short-term bounce attempts, but they keep running into resistance in the mid to high $4 area and getting sold. Support has been tested around the $3 region and a bit lower, and so far it has held on the bigger swings, but the momentum indicators are mixed at best. RSI has been hovering in that mid-range without strong bullish divergence. Volume on the up days hasn't been particularly convincing, and the moving averages are still sloping down. Short term, it feels more like a counter-trend bounce inside a larger corrective structure than a clean reversal. You can argue there's some strength showing up on the lower time frames when volume picks up, but the higher time frames still look heavy. What's going on with Audiera right now? The chart looks messy, sell pressure keeps showing up, and yet you'll still hear people arguing this thing is somehow undervalued. How does that even make sense at the same time? Let's talk about it properly. Audiera is a Web3 project built around rhythm and dance gaming mixed with AI music creation. Think of it as trying to bring that old audition style gameplay into crypto, but with AI agents that can actually hold wallets, earn, and participate alongside regular players. You've got a mobile game, a Telegram mini game, virtual idols, music generation tools, and this whole agent native idea where AI isn't just a tool but an economic actor. The token is Beat, running on BNB chain. It sits somewhere around the top 50 by market cap. Circulating supply is roughly 309 million out of a 1 billion max, and the price has been hovering near the $4 range after a pretty wild run earlier. The other side says, look at the chart, from $11 down to the 3 to 4 range is a massive drawdown. Token unlocks keep coming. Concentration among top wallets is extremely high. Mindshare has been low outside of the price pumps, and a lot of the revenue is still tied to the ecosystem's own activity, which can dry up when the token is in a downtrend. That's the classic value trap setup. The story sounds reasonable on paper, the metrics look okay in isolation, but the market keeps treating it like something that needs to go lower before anyone cares again. Retail often gets trapped exactly here, buying the undervalued narrative while the larger trend is still down and new supply keeps hitting. Risks are pretty straightforward and they are not small. Volatility is high. This thing can move 10 or 20% in a day without much news. Downside is still open if the broader market turns risk off off or if the next big unlock doesn't get absorbed cleanly. Retail traders love the "look how far it is from ATH" argument and pile in, only to watch it grind lower for weeks. Liquidity can thin out on the way down, and because so much supply sits with a small number of wallets, any coordinated selling or even just profit taking after a bounce can push price hard. There's also the usual GameFi and AI narrative risk. If attention rotates away from either of those themes, tokens like this can go quiet for a long time. Bull case versus bear case is pretty clean. Best case, the weekly burns keep pace or accelerate, user numbers and engagement climb, the next unlocks get absorbed without too much drama, and price manages to reclaim the $5 to $6 area and start building a higher base. If the AI agent narrative heats up again and Audiera can show real traction with both human players and autonomous agents, you could see a stronger recovery attempt toward previous highs over a longer horizon. Worst case is the opposite. Volume dries up, the burn slow because platform activity slows, unlocks keep adding pressure, and the downtrend simply continues with lower highs and lower lows until it finds a real bottom somewhere under $3 or lower. In that scenario, the undervalued talk just becomes background noise while price keeps bleeding. Short term, the picture still looks more corrective than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any confidence. Longer term, it comes down to whether the product can keep generating real revenue and whether the burn mechanism can meaningfully shrink supply while demand is still there. That's the only path that turns the current levels into something more interesting instead of just another post-hype consolidation. Nobody knows which way this results. The chart is still fighting the narrative, the burns are happening but the price hasn't cared much yet, and unlocks are still on the calendar. So the real question is simple. Is this the kind of project that can actually grow its way out of a deep drawdown, or are we just watching another high-flying token settle into a long, quiet decline while people argue about valuation?